Hi guys, it's Stock Curry, and I'm going to show how new information shows an imminent collapse of DCG, Genesis, and Grayscale could cause cryptocurrency markets to tumble and the stock market to go down as well. So let's get into it. In the wake of the FTX collapse, information is coming out almost daily, which provides greater insight into the bankruptcy concerns of other exchanges. BlockFi filed for bankruptcy today after FTX is no longer able to bail them out. And new information shows how Digital Currency Group, or DCG, who also owns Genesis, CoinDesk, and Grayscale, might be on the verge of collapse as well. Digital Currency Group, or DCG, is one of the largest cryptocurrency companies in the world, and its collapse could have an even greater implication than FTX in what could be one of the largest bankruptcies since the Mt. Gox collapse over 10 years ago. In addition to its own operations, DCG owns CoinDesk. CoinDesk is a cryptocurrency news website. DCG also owns Grayscale, which holds a number of trusts where people can invest in cryptocurrency. And finally, DCG owns Genesis, or Genesis Global Capital, as well as Genesis Trading. Genesis provides lending to the cryptocurrency markets, and one of their lending products is known as Earn, where regular customers like you and I can earn significant interest by staking our cryptocurrency. Gemini was one of Genesis' largest customers when it came to Earn accounts. In the wake of the FTX collapse, Genesis paused withdrawals or redemptions from their Earn accounts. Gemini customers were screwed over as they were no longer able to pull money out of their Earn accounts. Gemini did make it clear that the halting of Earn accounts by Genesis does not affect any other Gemini products. The Gemini Earn accounts were done through a third party, Genesis. Therefore, by Genesis halting the Earn account withdrawals, it only affects Gemini's customers who had Earn accounts. It doesn't affect anything else with Gemini. Now, while Gemini's customers are affected by this, Gemini itself is not. However, Genesis is in deep trouble. The Wall Street Journal reported that Genesis had loans outstanding to Alameda Research. Specifically, Genesis lost $175 million when FTX collapsed. Genesis parent company DCG gave Genesis $140 million in order to keep them afloat. Now, what's interesting here is that Genesis lost $175 million to Alameda Research, and then their parent company DCG gave them $140 million. So the net loss for Genesis should have been $35 million. And if their net loss was only $35 million, then why is Genesis still in so much trouble? Well, earlier this year, Genesis lent $2.4 billion to Three Arrows. Genesis parent company DCG then took on that loan and currently has a $1.2 billion claim against Three Arrows. So the $2.4 billion loan to Three Arrows was essentially wiped off the books of Genesis, shown here in this red line. And then Digital Currency Group, or DCG, then took on that $2.4 billion loan, shown here in this green line. Now, $1.2 billion of that was lost, which is currently part of the Three Arrows lawsuit. But what happened to the other $1.2 billion? Well, digging deeper, DCG, which was parent company of Genesis, assumed the entire $1.2 billion claim, leaving Genesis with no outstanding liabilities tied to Three Arrows Capital. Now, a list of creditor claims on the bankruptcy filing shows that Genesis made demands for Three Arrows Capital loans totaling $2.36 billion, or just shy of $2.4 billion. So here's what happened to the other $1.2 billion. The loans were partially collateralized that is secured by assets, meaning if anything ever happened to Three Arrows Capital, that Genesis could then liquidate the security that Three Arrows had put down for their loans. The loans were partially collateralized with 17.4 million shares of the Grayscale Bitcoin Trust, or GBTC, and almost 500,000 shares in Grayscale Ethereum Trust, or ETHE. All of that was liquidated by Genesis. So with $1.2 billion lost, the remaining $1.2 billion was liquidated, and it was Grayscale holdings that were actually liquidated. Now, we're going to get back to Grayscale in just 1 minute because they are part of the major issues occurring right now. Keep in mind that Grayscale is owned by DCG. So Genesis, a DCG company, lends $2.4 billion to Three Arrows, and $1.2 billion of it, or half of it, was collateralized or secured by Grayscale Investments, Grayscale also being owned by DCG. So the losses from Three Arrows Capital had already put Genesis and its parent company, DCG, into a very difficult position. When the FTX collapse occurred, and in the wake of that, a large number of customers started withdrawing funds from Genesis, that was too much for Genesis to bear, and what happened next got really concerning. Facing a rush of withdrawals, Genesis sought an emergency loan of $1 billion from investors before ultimately telling clients that it was suspending redemptions and loan originations. Now, the obvious question is, if people had deposited money into Genesis for their earn accounts and then they wanted to withdraw their funds, shouldn't that money be available to withdraw? And if it's not available to withdraw, why is it not available to withdraw? Well, it turns out that Genesis had the exact same problem that FTX had, that FTX was using customer funds in order to finance risky investments in Alameda Research. Now, Genesis, it looks like, is in the exact same situation, where Genesis was using customer funds, those deposits, in order to lend those out to other companies. They lent that money out to Three Arrows Capital and lost it. They also lent that money out to FTX. So when a large number of customers start requesting their funds to be withdrawn, Genesis literally does not have the money because they've lent that money out, and a lot of it has been lost. So Genesis is now forced to try to raise funds in order to pay out everybody who's requesting money. Since Genesis lent out so much money, they now have to go get a loan to pay everybody back. Genesis sought funds from Binance and Apollo. Now, you might recall how FTX also sought a bailout from Binance, and Binance turned down FTX, saying that their problems were beyond Binance's ability to solve. Binance also decided not to invest in Genesis, claiming that Genesis businesses could create a conflict of interest down the line. With Genesis unable to secure new financing, Genesis is now on the brink of bankruptcy. Genesis made the exact same statement that Sam Bankman-Fried from FTX made, that he was trying to avoid bankruptcy by getting financing. When FTX was unable to get financing, they were forced into bankruptcy. And now Genesis is in the exact same position. A Genesis spokesman said, "We have no plans to file bankruptcy imminently. Our goal is to resolve the current situation consensually without the need for any bankruptcy filing." Genesis is hoping to avoid bankruptcy by working with lenders to get more money, but so far they have been unsuccessful. What's interesting is that Binance's chief executive said earlier this month that Binance is forming a recovery fund to help strong cryptocurrency projects that are facing temporary cash shortages. Well, this sounds exactly like what Genesis is going through right now. So, if Binance is specifically setting up a fund to help cryptocurrency projects who are dealing with short term cash issues, why was Binance unwilling to invest into Genesis? This certainly raises a lot of red flags. It seems like Binance is the only company doing any sort of due diligence lately. After unsuccessfully raising funds from Binance, Genesis lowered the amount that they were trying to raise from $1 billion down to $500 million. Despite lowering the amount of money that Genesis is seeking to raise, they have still been unable to raise funds. Now, that pretty much wraps up what's going on with Genesis. They are in deep trouble, they are on the verge of bankruptcy, and they are trying everything they can to raise funds in order to avoid bankruptcy, but so far they've been unsuccessful. Now, let's talk briefly about Genesis' parent company, DCG. DCG has been trying to bail out Genesis from all of the loans that they have lost money on. But interestingly enough, DCG also owes $575 million to Genesis as a loan. That loan is due in May of 2023, or about 6 months from today. DCG also owes about $350 million in loans to a quote-unquote small group of investors. So DCG has supposedly been bailing out Genesis from all of their bad investments. Yet DCG owes Genesis $575 million in a loan. Now, this is very shady to me. Why would DCG owe their child company Genesis money while at the same time giving them money trying to bail them out? It appears to be some form of fuzzy math or money laundering, some way of shoring up the balance sheet in a very shady way. Now, those concerns are big enough. But if Genesis were to collapse, which they are on the brink of doing, and that in turn brought down DCG, that in turn could also bring down Grayscale. And this is where we really run into problems for regular investors into cryptocurrency as well as the stock market. Now, if you're not familiar with Grayscale, they own a number of trusts which are like ETFs. They're just not listed on stock exchanges. And because they are trusts, they're generally invested in by very large investors with a lot of money. Think banks, think hedge funds, think whales, just individuals with a lot of money. In other words, if Grayscale were to collapse, they could bring down a lot of banks and other hedge funds, which in turn could have significant implications for the stock market. Just like every other cryptocurrency exchange, Grayscale is supposed to hold the amount of assets that they claim to hold. So as customers have invested money into Grayscale, they should have assets on hand to match those deposits. However, Grayscale is refusing to show proof of reserves, citing security concerns. This is a major red flag that has caused the value of their trust to drop to between 40 to 70% below the actual value of their underlying assets. Grayscale's digital assets are supposedly stored at one of Coinbase's subsidiaries, Coinbase Custody Trust Company. In the wake of Grayscale being unwilling to show proof of reserves, Coinbase Custody came out stating that Grayscale's reserves were accurate. Coinbase Custody revealed the amount held in each of Grayscale's products. However, they did not share cold wallet addresses. Like Grayscale, Coinbase cited security concerns as to why they would be unwilling to share the actual blockchain proof of reserve or proof of funds. This has caused a lot of concern about whether or not Grayscale actually holds these funds. And when it comes to an ETF, or in this case, a trust, there are some concerns that you should not overlook. When dealing with an ETF or trust, the net asset value, or NAV, represents the value of each share's portion of the fund's underlying assets and the cash at the end of the trading day. The NAV is determined by adding up the value of all of the assets in the fund, including assets and cash, subtracting any liabilities, and then dividing that value by the number of outstanding shares in the ETF or trust. Now, due to intraday changes in supply and demand, the ETF market price and ETF NAV may slightly differ, but they're not going to differ by 40 to 70%. Here on the holdings per share, we can see the NAV of BTC at $15.11 per share, while the market price of the trust is $9.04 per share, meaning that GBTC is trading at a 40% discount to the NAV. You should always check an ETF's disparity against its net asset value for irregularities. If it is consistently trading differently from its NAV in the market, something fishy may be going on. Keep in mind that the investors into Grayscale are large institutions. These are considered sophisticated investors that have a lot of insight and information into a company's security, what's going on, and if these investors are unwilling to invest into Grayscale and they're pulling their money out so fast that it is causing Grayscale to trade at a 40% discount to its NAV, that is a huge red flag that Grayscale is in deep trouble. The impact from a potential fall of Genesis, DCG, and Grayscale should not be underestimated. It's crucial to the day-to-day operations of the crypto world. In 2021 alone, the company issued $131 billion in loans and set up $116 billion in trades. The Financial Times described it as the Goldman Sachs of crypto. To fund these loans, Genesis borrows from individuals and institutions that own large quantity of coins, known as whales, who receive a cut of the profits in return. Unfortunately, a lot of the individuals who invested into Genesis through Gemini's Earn product were not whales. They were normal retail investors like you and I. The attempt to secure funding has so far been unsuccessful, and of the $2.8 billion in outstanding loans on the Genesis balance sheet, roughly 30% are made to either DCG or its subsidiaries, known as Grayscale. That means $2 billion is made to companies outside of the DCG family of companies. So if Genesis were to go bankrupt, which they are on the verge of doing so, this could cause a $2 billion loss for a number of hedge funds, large institutional banks, and individual investors. Now, because a collapse of Genesis would also bring down its parent company, DCG, and in turn its subsidiary, Grayscale, Grayscale would be forced to shut down and their assets would be liquidated. Grayscale is one of the largest holders of Bitcoin, Ethereum, and a number of other coins in their trusts. If Grayscale were to shut down, then their trust would be liquidated, which means there would be an immediate and significant selling pressure on Bitcoin, Ethereum, and a number of other cryptocurrencies. The cryptocurrency market would collapse faster than we've seen it do at any point in recent memory, and it would cause a significant drop in the price of cryptocurrencies. Because the cryptocurrency market and the stock market are so closely tied together, this would also cause a significant drop in the stock markets. And don't forget, with the large number of loans that Genesis has lent out and also borrowed, this would also cause a significant decline in the balance sheet of a number of large institutions, which would cause further declines in the stock market. Now, although the effects on Genesis and other companies tied up with FTX like BlockFi and Voyager Digital are just now beginning to take shape, it's possible that many more companies are quietly sitting on significant losses. It may take a year or more for things to shake out before we really know just how far this contagion has spread. So, in summary, things right now are bad, and it could be a year or longer before the full fallout of all of these companies collapsing really takes effect. One thing is for sure, we have not seen the last of the bankruptcies, and this next bankruptcy between Genesis, DCG, and Grayscale could have the largest impact of all. If this video helped you understand what's happening in the cryptocurrency markets and how it could affect the stock market, then be a good friend and share this video with your friends and family so that they will know what's going on as well. And make sure you hit the like button and subscribe so that you'll know more of what's going on in the future. And don't forget to watch the last video that I uploaded here for more information on the stock market.